Hey guys, what's up? Welcome to another episode with me, Shashank Udappa. And in today's episode, we will be covering something that all of you guys asked me to cover, which is Bandhan Small Cap Direct Fund. Now, I know a lot of you guys were asking when I was doing the PPFA's video that Shashank review the small cap fund. Now, please understand before I get into the video that small cap is a very highly risky instrument, right? They work in market cycles. Sometimes they go up, but their falls are also 40-50%. So whoever is investing or planning to invest in small cap as a strategy, please have a very long-term horizon view on this. Don't have a short-term horizon view, right? And don't buy mutual funds like how you're picking stocks. Mutual funds are by default an instrument that will make you money only over 5 years or 10 years and above, right? If you're going to keep buying and selling, it's not going to work. So let's quickly get into the video without wasting any more time. And as you guys know, I'm a SEBI registered research analyst. So I want to be very clear. Whatever I show you today is just for knowledge purposes. None of it is a buy or sell recommendation. We're in fact evaluating what Bandhan is buying and selling, right? So no means this is a buy sell. And also I have not got any money from Bandhan small cap. I mean, they're too big to give me any money, but I've not got any money to show this. It is just out of pure knowledge. Okay, let's go. Now coming to Bandhan. So a lot of people liked Bandhan only because they were performing really well in the small cap cycle. Now there are two companies in the small cap space. One is like the king of the industry, which was Nippon India Small Cap, which is about 20% compounding over 10-15 years, which is very hard to get, trust me. And then you have Bandhan Small Cap, which has also done really well. And they've done really well mainly in this cycle, this entire COVID cycle from 2020. They have actually done really well. Their NAV was at 8 rupees and now their NAV is almost at 48 rupees. So in a span of 5 years, the 8 rupees NAV has gone to 48 rupees just on mutual funds. Right. So that is a very good indication of how compounding works in mutual funds and why people say that you should keep buying in SIPs, because you would have averaged it very well and your XIRR would have also become very good. But please understand, small caps work in cycles, and it's very evident from this chart that you can see some cycles, right? You saw this bull, and then from 2021 till 2023, there was zero returns. But this is where your SIPs would have made a killing, right? You would have made good average of units. And then from here, again, it went up from 20 to 50. Basically, your SIPs doubled in 1 year. Your NAV doubled in 1 year. And then from September 2024, that 52 is continuing and it is still currently at 48. In fact, not bad. It's not fallen that much, right? The fund size is 20,000 crores. And you compare this to, let's say, a Nippon India, right? Nippon India small. If you see their cycle is also pretty much the same, 23% annualized. They've been there for longer periods, but Nippon India killed it after COVID. So their NAV went from 32 to 200. So damn good that was. And they've, again, cycles, you can see cycles. So in the bad cycles is when you start averaging the small cap companies. In the good cycles, you enjoy the units, right? But in the small bad cycles like this is where you start buying more and more units if you believe that the fund is good. But please do your own research before buying the fund. There are a lot of complications on this fund as well, right? Now, if you look at them, they're 12% in cash, 87% invested. That means they have gone buying and shopping in equity markets. Again, most of it is in financials, consumer discretionary, healthcare and materials. So quite balanced, not bad. 17,530 crores has been deployed till now. The P ratio of the entire basket is 15.75. That means it is not bad. It is quite good. It is not a very expensive basket. And they have the top 5 allocations and top 29 is here. Okay, that's fine. Let's go check what have they done in this month. Okay, in the month of Feb to March, what have they changed? So one thing that they have bought more is REC. Okay, REC Limited, good dividends also. They've actually added quite a bit, and 3.5% of their entire AUM is just REC. Shoba they have added. They've again added a little bit of Shoba, which is very interesting. But a lot of people are talking about that in the Bangalore market, real estate is showing some signs of cracking. But so be careful. But Shoba is something that they have done well. And Shoba was actually doing well in Dubai also, UAE. So that is something you'll have to check out now. LT Foods they have added. LT Foods, very small addition, not a big addition, but they've added LT Foods, and 2.27% of their money is in LT Foods. LT Foods is basically a company that exports rice, one of the biggest exporters of rice to all over the world. And mainly they were making a lot of money from exporting rice into Dubai and Saudi countries. And if you see LT Foods from a long-term standpoint, they have been doing well from a long-term standpoint, right? So they have not, I mean, it's okay. I mean, it's not great, but they have added LT Foods. Profits are growing, but very up and down, up and down, up and down kind of a system, right? Then they have added Arvind Fashions. So Arvind Limited, not Arvind Fashions, sorry. They've added South Indian Bank. Very interesting picks. South Indian Bank, they've increased stake. Arvind, they've increased stake. GE Shipping, they've increased stake. So GE Shipping again is a very interesting company because they were the guys who were benefiting from this whole war. They're an oil tanker company. Only problem is they had old tankers which were getting refurbished and they had to buy new tankers. So they sold the old ones, bought the new ones. Buying new tankers are also very expensive. It was available at 8 p at one point. Now I'm not sure how much it's gone actually. But in the entire war scenario, GE Shipping was considered basically a good pick during the war. Oh yeah, you can see this 55% in this market. It was available at 8 p when I was tracking it. Now I'm not sure. Oh, it's still at 8.7. So it's crazy, right? So this is where Bandhan has started picking well. And they've been holding GE Shipping for quite some time. PNB Housing, they've added a huge amount of stake. So good amount of stake added in PNB Housing, good amount of stake. Yatharth Hospital, they've added. ICICI Lombard Insurance, they have added. General Insurance, they've added. Not sure why. There is nothing crazy about General Insurance, but they have added maybe for a long-term holding kind of a thing. Cholamandalam Finance, very good pick. Again, they've added a good amount of Chola Finance. They had a small Apar Industries. They've sold a very small amount. I don't even know why they sold only 1,500. But they've reduced Apar Industries a little bit. Jubilant Pharmova, again, a good company. They have added actually quite some interesting picks. They've added almost 11% in Jubilant Pharmova. Jubilant had broken their company down into Pharmova, Ingrevia. I think this one is in radiology, if I'm not wrong. So they are doing well. Paytm, they have added a good amount of stake, 28% increase in Paytm. So Paytm, by the way, for a lot of people who don't know, was becoming profitable. And that is why it did a turnaround. And then it fell down during the war. But Paytm is a company that has been doing a turnaround. So if you actually go look at their profitability, they have started coming into profit zone. And the profit for these companies, what happens is when you're a tech company, the profit starts exploding when they become profitable, right? We had done one episode on my channel on Urban Company. I had even presented it in my offline Bombay event. And there also we spoke about this, right? So very interesting. So you should check it out. By the way, I don't know how many of you all would be interested in this, but this weekend, April 18th, Saturday, 7:30 p.m. to 9 p.m., we are doing a beautiful sector webinar on the hospital industry. If you want to come, you can please join. I'm going to put the link below. There's also a coupon code. You will get another 20% off if you use that coupon code. So it's $399. What we will do in this is we will be it's a 1.5 hour to 2 hour beautiful webinar that we will be doing. And here we'll be talking about the entire hospital sector, the future drivers, and we'll be analyzing 4 companies and 2 more bonus companies. So almost 6 companies will be going into and analyzing. So if you have time on the weekend, would love to come. For guys who really want to learn, like-minded guys, you can come and we will learn together. I'll put all the links below, right? Awesome. And if you want more information on it, you can join the community, because inside the community, also in the YouTube community, we'll keep putting updates. Apart from this, we'll also put a lot of market updates, as you can see, and you get access to some of the videos as well, which are the members only, which we will start very soon, right? So coming back to the video. Now, what have they added in banking? They've added DCB Bank. They've added Paradeep Phosphates. They've added more. So Paradeep Phosphates was doing a merger and they were actually flying in the last few months, and they've added Paradeep Phosphates. DCB Bank is a very structurally sound bank. I have seen DCB Bank in many people's portfolio. It's a very structurally sound bank. It's done 62% return. So as you can see, Bandhan's knack of picking companies is quite interesting. I would not say obviously you have to do your own research before going into it, but it is very interesting from the way they pick companies is very interesting, right? Repco Home Finance. So they've added a lot of general insurance companies, 2 general insurance companies. They've added banks all around the board. Now they've added Repco. They've reduced Shaili Engineering because I'm assuming it's too overvalued and everyone's talking about the GLP trend, but I feel it's overvalued. Again, they've added LIC Housing Finance also, good amount, 6%. LIC Housing Finance they've added, and they've added Tark Limited, Satvik Green, Rashi Peripherals they've started adding, Sai Life, and they've completely exited Sai Life. Very interesting bunch of picks. So these are the companies they've bought. So if you look at the highest conviction, they have actually bought highest conviction as in with respect to AUM also and with respect to amount they've bought. It's ICICI General Insurance, it's Paytm, it's PNB Housing Finance, and Paradeep Phosphates. I understand about 197, but now I need to go back and read about all the other 3. This is why I like looking at such buys, right? I want to go see and understand what is happening, why are they doing it. So I want to go and listen to it and understand it. So I will do my own research now after this to go and read a little bit more about this, and I will read a little bit more about the other companies also. For example, I want to actually learn what is Tark Limited. So this is something I'm seeing for the first time. So I'm going to start learning a little bit about that. Pharma I already know, so I'm going to learn a little bit about that, but I need to see what's happening in the general insurance space, because it seems like they're going a little double down on that. So that is something I'll have to analyze and take a good call on that, right? And what have they exited? As I said, they've exited Sai Life, Shaili, and Apar. Apar not fully, they've reduced. Shaili they've reduced. Sai Life they've fully exited. So So I'm going to keep a track of it. And again, if you have your time or if you don't have time to look at all of these companies, do subscribe to the channel because I'll keep putting more interesting content out for you guys. Awesome. This is me, Shashank Godapa, signing off. Until the next video, I will see you guys soon. Take care. See you. Bye bye.